Well, welcome back, my degenerate Homo sapien friends from distant lands and far regions of the globe. We're about to dive right on into the charts. Markets were absolutely crushing faces on Friday morning, pushing the all-time highs, getting everyone to FOMO in with their life savings when all of a sudden, wham! An absolute heroic dumpathon, crapping straight through the support, and the Bears pulled a fatty Uno reverse card on the Bulls, leaving them in deep despair and depression. Now, to be perfectly frank, out of all the options that could have played out, this is the worst case scenario. Let us have a moment of silence for our portfolios. Altcoins got completely rolled into the grave as well, breaking straight through the support that we really needed to hold. Boop! So, why did this happen? You may ask. Well, let's take a look. The unemployment number has risen to 4% on Friday. And as you can see here, we've been creeping up since 2022, just slowly but ever so surely. And this is the COVID spike, by the way, which is absolutely nuts. But if you look at times in the past, unemployment will often kind of creep up slowly and then really accelerate towards the end. Just a little slow, and then a fatty boost. So yeah, this is not exactly encouraging news, but this may encourage the Fed to cut rates soon. As you can see, ECB in Canada has cut rates already, front-running the US Federal Reserve. Now, in the very short-term time frame right here, we really want to see a bounce and rally into tomorrow's close, because the weekly closes tomorrow at 7 p.m. And as you can see, this candle is looking very weak. For the medium-term daily time frame, you can see we've been putting in kind of a series of higher lows here. So if we're to bleed back down to these levels, you're going to want to see a bounce here and then a reattack of the highs. A break of the highs, a retest of the highs, and then that leads to a girthy leg in the upward direction. I personally at this point think that's a little optimistic after seeing the aggressive nuke off these high levels here. I've seen this in the past. This happened up here. Usually leads to slightly longer term legs down. So the bottom line is we really need to hold this 50% level from the high to the low of this consolidation range, which sits right here at about 64K. If we are to come down here, what we want to see is a bounce here, some structure form, and then a reattack of the highs up here. And this would form kind of this macro ascending triangle for a giant gigabust. So if that doesn't happen, and say we come down here and just fail this level, I mean, the last line in the sand is right here at this bull market support band, which is catching up to this 50% level. Depending on how long this takes, they may collude together, which would be quite nice if this thing kind of just chops around up here and then comes down and then these two things are meeting. I mean, that would just be the level to hold. And if we are to fail that level, say we come down here and where this bull market support band ends up and we just fail it, I pretty much think we're taking out this low. We'll probably stop for a second here, come down. We're going to visit 52K here, which is kind of a short-term level. If we fail that level, we're coming down here. And this is kind of the last line in the sand for the bull market. If we fail that, game over, my friends. Party is over. We can weep and gnash our teeth. I'll show you what I mean. So this is kind of the level. We had kind of a huge ascending triangle over here with this macro top at 64K, another macro top at net 69K. We came back down, and then this was kind of the level where we wanted to break here and then come back up here. We failed that right here and just got nuked into oblivion. So if you come over here and look, we found some short-term resistance at that level, got banged off it. And this is the line in the sand. Like, if we're going to revisit this level, which I honestly think is very unlikely, I think we won't go this far down. But if we don't find some structure here and just really build our way back up, oh, it's over. Short-lived cycle. So, in conclusion, looking at the macro term, we look great. So I wouldn't worry too much yet. Look at this. We just have a bullish hammer forming on the 3-month. These are 3-month candles going all the way back to 2012 back here. These are the cycles of Bitcoin. You can see we get one horrible year down and usually 3 years up. One horrible year down, 3 years up. We've already experienced the horrible year down in 2022. 2023 was a great year, and into 2024, we are looking just fine. You can see there were some more bullish hammers over here where the market just needed to cool off for a bit, and then we were on our way. This is the opposite of that. This is called a tombstone candle, which means you're on your way down. So I think in the macro term, guys, we are just going to absolutely shred faces to the upside. We'll come up here and just bust. And probably, break 100K. That's the hope. You know what I mean? So, yeah, I wouldn't get too worried. What is this garbage? For right now, I think that we're probably going to come back down, kind of form some structure, and then continue on as the markets figure out their crap and what we're doing. All right, ladies and gents, this is where we're at. I hope you didn't sell your bags and run in shame. We must stay strong, brothers. We must. Do not capitulate your bags. Hold strong, and we will be legends one day. Ta-ta for now.